Guys, eToro just announced that from last Thursday, 13th of April onwards, you can now trade stocks, ETFs, crypto, etc. through the Twitter app, or should I say Elon Musk soon to be super app. I know this news caught me by surprise and my immediate reaction was, what the heck? Of all the available brokers out there, eToro? Really? Well, as someone that has researched stockbrokers intensively and have spoken to almost 2/3 of them in the past 2 years, I don't think eToro is the best choice out there because of many reasons that I will share with you in this video. And no, this video is not sponsored, and before you say,
Ziet, I know you hate on eToro because you are sponsored by Interactive Brokers.
Well, not true, because if eToro is now going to disrupt the brokerage industry again through Twitter, guess what would the other brokers do? Probably spend more on marketing to compete, right? So at the end of the day, it will just be a net positive to all content creators like us. So before we jump into it, you need to know a little bit more about eToro's background and history. They are basically founded and headquartered in Israel since 2007 with several licenses in the US, UK, Australia and Cyprus. They were mainly famous back then in the period around 2017 to 2020 when they exploded in the stock brokerage scene with zero commission trading, when the banks were still charging crazy amount of fees like 20 to 30 US dollars per trade back then. And plus they were also super aggressive back then, running marketing campaigns literally everywhere, and I'm sure most of you seasoned investors and traders confirm heard of them before. And yeah, they got so big so fast that exactly 2 years ago on March 2021, they announced that they are going public, or to file for IPO, initial public offering, through a reverse merger with a SPAC, Special Purpose Acquisition Company, with a valuation of $10.1 billion. And back then, SPAC was so famous and hyped because private companies can now easily go public without going through the lengthy and costly process of the traditional IPO. So because of that, many SPACs grew too big too fast and eventually died out. So that's why eToro was one of the affected companies, as their valuation was slashed and slashed repeatedly after regulatory authorities cracked down on SPACs, and as a result, they missed their deadline to go public when their SPAC arrangement expired on the 30th of June 2022. And that's why if you just pause for a moment and think, it's been some time since we have all heard of eToro, right? Well, yeah, basically the company was struggling to survive, and you can even see that from their own latest financial report that they just released. Even though at first glance it looks like, wow, the total amount of funded users is growing every single year. Good thing, right? But take a pause and see the net growth in 2022 was actually just a very small chunk of 0.4 million, and that's a huge decline compared to what they had back then in 2021 after they paused most of their marketing efforts, plus laying off employees in order to cut costs while they struggled to complete the SPAC deal, which eventually failed. So 2 years later from the point of their first IPO announcement on the 21st of March 2023, which is actually very recent, they managed to exercise the Advanced Investment Agreement AIA that they had back then, which was put in place in case the SPAC deal didn't go through, sort of like an insurance policy. And because of that, they now got a fresh funding of $250 million in funding, and is now valued at a $3.5 billion valuation, a decline of about 65% from its initial valuation. So now here are my 2 cents worth of opinions on why I think this Twitter and eToro partnership is not really a good idea. First of all, there are tons of better brokers out there that offer far more superior brokerage service, significantly longer track record, much more better research tools and resources. That could be Fidelity, TD Ameritrade by Charles Schwab, Interactive Brokers, E-Trade by Morgan Stanley, Merrill by Bank of America, etc. And they are all big US financial institutions with over 30 to 40 years of establishment. But eToro, since 2007, yes, I know they have a good variety of licenses now, but I mean, there must be better options, right? Next, exposing the 450 million Twitter users, which includes users of various financial literacy level, to eToro's copy trading feature might not be the best idea. That's because beginners tend to have minimal to zero idea on what they are doing when they first foray into the stock market, and the last thing we want is to cultivate the habit of just copying the trades of some stranger over in the internet and then think you are investing your money, but actually you are just risking your money on the hands of someone that has no interest on your money, except for the asset management fee that they are receiving from the platform. They will have no idea when to take profit or when to cut losses and end up losing more money than they should, and then get discouraged from investing. That's the worst case scenario, right? Thirdly, this is less from the eToro side of things, but since Elon Musk intends to make Twitter a super app which could soon offer more digital financial services, that definitely requires more customer data in order to help with their credit scoring algorithm. Now, I believe Twitter itself must already have pretty robust data on consumer behavior, background info, etc., which could then fit into their future credit scoring AI machines. But eToro, is that really the best place for you to leverage on such information? I would ideally go for larger brokers with much more customer data in order to do that. But then again, eToro could have the younger demographics that Twitter is targeting, so that could be a possibility as well. Look, don't get me wrong, more access to stocks, ETFs, commodities, crypto, etc. to retail investors and traders, that's a win for all consumers and even content creators like us. I'm all for that. The entry threshold to the financial market should be equal to everyone because brokerage service is pretty much commoditized, and rightfully so. No banks or even brokers should be allowed to charge exorbitant fees just to execute a simple trade. Well, one possibility which is not even wild to think of is Elon Musk could be targeting to acquire eToro, which comes with a pretty huge customer base, plus many readily available licenses, and just infuse them into the Twitter app. So this way he can take away the eToro branding, but at the same time get the brokerage and stock settlement license with just a price tag of $2 to $3 billion, which honestly is just a drop in his net worth, and it's pretty worth it for the time saved. But of course, that is easier said than done. You'll be damn sure that the US Securities Commission or the SEC is not going to let that slip past quietly. And I must emphasize, I have no hate for eToro. As a finance content creator, I would love to see all brokers flourish and compete with one another. But with their current situation, like I said, which I can only guess is not so great since they need to rely on fundraising to stay afloat, plus the various factors I just shared with you, I don't know. I just don't think they are the best choice out there at this current point in time. They could be better, yes, but definitely not anytime soon. Alright, that's just my 2 cents worth of opinion. What do you think about this news? Let me know in the comment section down below. As usual, if you found these updates helpful, you can support this channel for free by checking out the links in the pinned comment down below. Thank you very much for watching, and I wish you a very nice day.